Yo, what's going on, everyone? Welcome back to another video. Today's lesson is going to be on institutional market cycle. I almost said microcycle, but institutional market cycle. This one is going to be on just, quickly giving you the three examples of the different cycles in the market. As we know, Forex is, crazy. It moves a lot. And there's certain patterns that the market follows, involving with price action, but it's not the type of patterns that you're, used to. It's not orthodox patterns such as um, bear flag patterns, double bottoms, double tops. Rather, it's something you visualize with your eyes, and then you keep it inside your brain, and you don't need to mark it up. You can just see it on the charts as soon as you look. So let me start off with with the basics. So we know that there's expansion. This is the first cycle in the market when the market is expanding. The definition of an expansion is basically when the market is moving from point A to point B, but in a upwards direction. I don't mean sideways or retracing, I mean in a nice upwards 90-degree direction. Doesn't necessarily have to be 90-degree, but as long as there's the momentum and the bullish pressure is going up, then that is considered as our expansion. Now, the retracement, which is the second cycle, is when the market is, creating higher highs, higher lows, or lower lows, lower highs, and the market retraces before making that major expansion move up. So this is basically just a pullback phase where the market pulls back and then pushes up and follows it up with an expansion. And then right after that, we're followed with a manipulation phase where the market creates liquidity both sides of the market, where there's liquidity at the highs and then there's liquidity at the lows, where all these sellers are selling at this resistance and all these buyers are buying at this support, and eventually the market does end up selling off or buying up to take out all those liquidity of the buyers and sellers, and the market ends up doing its thing and stopping everyone out. Now, the importance of knowing these three market cycle or phases, whatever you want to call it, the reason this is really important is because we see this in the market every single day, and we know this as well. I know a lot of people are like, okay, I already know this, but you don't really know how to implement it properly. You have the right idea, but you don't have the right action of it. You don't have the right action, basically. So let's go to a theoretical example. So theoretical example, we're in a bullish trend, obviously, and the market is going up. We're gonna start off just by marking up the basics. This is my expansion because it brought me from point A to point B with a nice upwards direction, and then this is my retracement because we had that pullback phase, and then we're followed by another expansion. Now, after that expansion, we have this manipulation phase where the market is creating liquidity both sides of the market, of the sellers where the stop losses are resting above, and then the buyers where the stop losses are resting below. And like I said in the manipulation video, like I said in the liquidity video, if the market is overall moving up, most likely it's going to take the buyer stop losses first. So it's going to break below the buyer's support, take out that money, and then create an expansion and take out the seller's liquidity next. Either way works, but yeah, and I'll get into how we can use this for entries and stuff. So then we have that expansion after the market stops you out. So this isn't a coincidence. The market stops out the retail traders, and then it pushes down up to this point right here, and then from there it expands once again. Now, after that expansion, we have another area of manipulation where the market just created equal highs right over here above our level of interest, above and below our area, and then we have equal lows just over here. So now we just know that the market is once again manipulating and it's creating liquidity. So the way to identify where your manipulation phase is just by knowing if the market is moving either sideways, is it going down to retrace, or is it moving sideways to create liquidity? Is it not going anywhere? Is it just staying there and breathing? So after the market manipulates, we have that retracement back down. Now, what's important about this retracement and this retracement is that these retracements are stopping out the buyers, first of all, and two, it goes down to a specific area before it continues going up. I know this is theoretical, and I'll show you guys this on the live chart, but we can see that when the market did retrace back down, it doesn't retrace up to the 50 or the 60 or all the way down here. It retraces down to this point where the overall expansion first started. So this is where the expansion first started, and the market retraces back down to that level and then expands once again. Once again, this is theoretical examples. I'll get to real examples just now in a second. So let me actually go to Euro AUD, and then we'll look at, well, honestly, we'll just do it from here. So right here, this is our original area of expansion right here. The market pushes up. Now we were pretty bearish at one point, but from a micro perspective, we are bullish now because we broke past this previous lower high. And like I said in the break of structure video, sorry, the institutional market structure video, this is a proper break of structure, and we can definitely consider ourselves to be longs for the time being. So once we have that expansion up, the market retraces. After the retracement, we have this manipulation phase where the market just created a bunch of liquidity of the buyers and the sellers above. Now we also had more liquidity resting here, so the market did end up retracing a little bit lower, manipulated once again, and created liquidity. Now notice how price comes back down to the original area where the expansion first started. So this is called an institutional candle, and we'll get into that in a different video. We're going to mark it up from here to here. Just because this is the 45-minute time frame, and yeah, so the market comes back down to the original area where price expanded. So if price expanded over here, what we want to do is we want to look for that last consolidation area before price went up. So for example, right here, price pushes down and then it consolidated left and right here, and then it pushed up. This area over here is our demand zone. Price pushes down into our demand zone and then re-expands once again. Now same thing happened here. We have our expansion right over here, right? This is where our original expansion happened. Now price pushes up and then it retraces back down, not to the original area, but it does make a deep retracement back down into, like, you know, this institutional candle right here. And we're gonna get into all that later on in the course, don't worry. But price retraces back down to the original area where the price expanded, and then once again it expands. Now same thing over here. We have our expansion move up. Right, we can identify that by understanding that price was at point A and it got to point B in a really you know, strong momentum structure, and then price retraces back down to the original area where price firstly expanded. So in this case it would be like something like this, right? And then price ends up using that level to once again re-expand back up, right? It expands back up right over here. So draw this one correctly, my bad. Price re-expands back up, and then where does it end up going? Well, right after that expansion, we're actually followed by a manipulation phase, right? So let me make this as red once again. So once price did finally expand, it manipulated left and right. We created equal highs and we created equal lows. Now price came back down to test this level a second time, which is fine. That does happen a lot of time. Now right over here, this is the stop out phase. So this is when the market goes down to stop out the retail traders, and then it reverses, right? So this is something you already know. Now we have this blue area where price re-expands right here, and then we manipulate. Now we would be expecting price to retrace back down, right? And if we were looking for price to retrace, our original area of interest would be, you know, somewhere over here where price originally expanded. But because price consolidated and then continued going up, this level is no longer a value. We're not looking at this level anymore because price continued going up. It didn't retrace. That tells you that banks have a higher interest and objective to taking price higher rather than lower right now. So if you ever see an area where price expands and then consolidates, and then right now this area, and this area, they're all valid. But as soon as you see price re-expand and it doesn't retest our areas of interest, that's completely fine. That means that you don't want to focus on there anymore. You want to focus on the next expansion zone. In this case, this is our next expansion zone, right? Well, once again, price manipulates and then it expands once again. So in reality, we don't really have what do you call it, like we're not focused on this one anymore because price re-expanded right over here. Now after that expansion, we have this manipulation phase where price creates equal highs and equal lows, meaning liquidity above and below those levels. Now I was focusing on this area of interest right here, this 4-hour order block, whatever, we'll get into that later. But price re-expanded back up, breaking structure. So this is key. If the expansion is breaking previous expansion highs, meaning that we had an expansion over here and price broke that expansion high with the newer expansion high right here, that basically tells you that your new expansion area of interest to focus on would be this expansion right here. And that's why price ended up using this perfect area of interest right here as a demand zone to completely shoot up. And I called this out in the free Telegram group in the below. So one pattern that we're all noticing right now is that price action is retracing back down to the original area of expansion and then continue going up. Now that doesn't mean that this area isn't valid anymore. It just means that we have to move our areas of interest to somewhere else. So for example, this is the new expansion, right? I would highlight this as my new expansion because this is where price got us from point A to point B and broke structure right over here. And then technically I could say this is all my manipulation, right? So let's highlight that as red. Now what I would want to be doing at this point is I would be saying that, okay, banks clearly don't have any interest in selling down right now, right? We haven't made a proper retracement in a while, but if we're looking at liquidity wise, we have also left a ton of money for the banks to pick up later on. So we had some liquidity over here that did end up getting picked up. The liquidity market ended up clearing it right here. So technically there isn't any more liquidity here, but we still have money resting here. We still have money resting over here, and we still have money resting we only have money resting here, here, and here. So that does mean that long term we are going to have to come back down, but because we haven't seen any bearish structure form, nor have we seen any institutional market cycle showing us that price wants to go down, we can't take shorts. We have to stick with what market cycle is telling us. Right now, all I'm seeing is expansion, manipulation, expansion, manipulation. If the market made a big retracement like that, right? Let's say make this purple. Boom. If price makes a big retracement just like this, right? Price ends up selling off. Boom. We see this big major retracement back down, and then we might potentially say, okay, now Euro AUD is probably going to target all those lows, and now it's our time to be patient. That doesn't mean we necessarily take sells right away. It just means we have to be patient because, for example, it might be just taking out the liquidity over here to do what? To retest this original area of expansion or this original area of expansion. And what's good about understanding the market cycle of all this is that you're not looking to enter on the manipulation phase. Rather, you're looking to enter when price comes back into that expansion phase right here. Right, and I showed you guys how this works really nicely. Now let's go to Euro USD. And let's look at this. We actually was a 4 hour. Make this a little nicer, and boom. So overall we have an expansion right here. Price retraces a little bit and then expands once again. Now technically speaking, you would want to be focusing on this area right here, but you would have gotten stopped out if you did that. Now there's no excuses for that. At the end of the day, sometimes price action or sometimes this works out, sometimes it doesn't, but this is why you also have to look at the past. Right here we have another expansion mode, or phase rather, and then we have a small retracement phase right after that. Now what did price action do? Well, it ended up using that original area right over here from this point down to this point here. If we check the daily time frame, maybe there's an institutional candle there. Yes, there is, right over here up to this point here. Price action ended up using this institutional candle. Like I said, it consolidated and then it pushed up and ended up using that original area of expansion to re-expand price. Now same thing happened right here. Price expands, we break structure towards the left. It retraces back down to where? To this institutional candle right over here, and then it continues going up. Now over here this is a little different. Price did end up expanding. We manipulated, created equal highs, equal lows, and then we re-expanded once again. Now once price did re-expand, let's go down to the 1 hour to make this a little cleaner. When price did re-expand, we had this area of manipulation, and then we had that retracement where price ended up respecting this institutional candle, and it did give you a decent intraday move for like about, let's measure this, just about 26 pips, and then price manipulates, creates equal lows, equal highs. Market takes out those equal lows, and then what do we see happening? Let's go back to the 4 hour and let's analyze structure. Let's delete all this and let's analyze structure now. Let's delete all this and analyze structure. So boom, we have a high, higher low, high, higher low, higher high, lower low, lower high, lower low. So clearly the trend direction is changing now. And like I said, that doesn't necessarily mean that we are going to be taking sells right away. All it means is that the market is going to make a deeper retracement to do what? Well, to reach a next level of expansion before continuing up. So that could mean that price might be coming back down towards this expansion over here, and then using that expansion to go up. And what's good about this is that we're also implementing institutional candles, imbalances, and we're going to get into that all in a different video. So for now, I'm just keeping it simple as institutional market cycle. So I'm not here to say that you should buy every single time price expands up. All I'm here to say is that we're looking to enter on the areas that have the biggest moves towards the upside, the most you know, areas of momentum, the biggest pushes, the biggest pip moves. In this case, this is a big pip move that I'm looking to enter on. If I looked at this and I'm like, oh, okay, market is going down, I'll sell, I'll just be confused. But because I understand institutional market cycle, I know that when I do see this small little retracement, it's just a retracement. When I do see this consolidation, market is generally just consolidating. But now I could see that price consolidated over here with this big area of consolidation, and price ended up breaking down. Now that doesn't necessarily mean we're bearish. All that means is price is breaking down to come back to retrace into an imbalance, in expansion, and then from there continue going higher. Now I'll show you guys a trade entry I did catch on GBP USD, or a trade entry that I'm potentially going to catch on GBP USD using this expansion retracement. So at this point, I want everyone to pause the video and label out the expansion and the retracement and the manipulation. Alright, so pause it. If you've done that, good. If you haven't, I'm disappointed. No, I'm joking. But yeah, we have this expansion move right up, right here. Price expands up. How do I know this is my expansion? Well, it's all about structure. Let's look at this. Structure wise, we were pretty bearish. Not bearish, but micro time frame, we were bearish, right? We were bearish, and then boom, right here, market completely shoots up. So I know that that's my expansion. After my expansion, I have this small little retracement phase technically. And inside of this retracement, one thing I can notice is that there is some type of manipulation. We have equal lows resting over here and then equal highs resting above. Market ends up taking those equal highs out and then the equal lows, and then the market ends up pushing up. But because we're trying to keep this simple as possible, let's just consider this big move down here as a retracement. And then right over here, we're followed by another expansion. Another expansion right here. Now price ends up retracing right here. Let's put that as purple, and then it re-expands back up. Now this is what I'm trying to show you guys. Price is going to come back to the biggest moves in this case, and I'll get into that, but it's going to come back to the biggest moves that broke structure. In this case, if we look towards the left on the daily time frame, right, we have this high, we have this impulsive high. Price action ended up breaking above and closing above that high right here. Right, if we go down to the 4 hour, you can see that we end up breaking above and closing above this high right here. Now over here, we did wick above it on the 1 minute, 5 minute. We did end up breaking, closing with the candle above. So technically, it is a break of structure. And now what we want to do is we want to be focusing on the major levels that caused that. So in this case, our major levels would be this one and this one. I wouldn't be focused on this one, rather, because this is way too deep for GBP USD to really retrace, and it doesn't make sense because we are in an uptrend. So the two levels that we would want to be focusing on are the expansions that are closest, not closest to price as in take the expansion that's right beside price, but that makes more sense because at one point, price, if you mark up your expansion, it could either be too low or it could be too high. You want to find that median right over here. This is that median where the price had a really nice move up. If we measure this would be about 364 pips. So this is the biggest move with a lot of momentum. It did break some structure towards the left over here. We also cleared liquidity over here. Let's mark that up. Liquidity cleared because we had equal highs just over here, and this move ended up taking those equal highs, we can see. So obviously this expansion over here is much more likely to get tapped in rather than this one over here. But nevertheless, we're basically still waiting for both confirmations. We're still waiting for price action to come into this area where we have an institutional candle, and we would look for our confirmations. And I showed you a video on confirmations, but we'll get into another video getting deeper into that. So that's generally how expansion versus retracement works. Another tool that I do use for my expansion versus retracement is the Fib tool. Now these are my Fibonacci levels. I showed you guys this already. You guys can copy this. But one thing that I do is I measure my expansion from the low up to wherever the expansion finished, right? Up to wherever the expansion finished. So what I would want to be doing is I would want to be seeing price come back to the 70, 78, or the 88. These are my blue golden levels, not the 60 or 50, but 70, 78, and 85, or sorry, 88. But because price didn't end up stopping there, what I would have to do is I would have to move my fib from the low up to the high right here. So from this low up to this high, because this is where price stopped and now it's retracing. Either way, as long as price makes a retracement in the 70, 78, or the 88, then that's more confirmation for me to take a buy inside of this level, inside of this zone rather. And what we'd be focusing on, our institutional candles are inside of this 70, 78, and 88 zone, but we'll get into that later on. Now same vice versa for this one, highlight the expansion from the low up to the high wherever it finished. In this case it finished right over here, delete that. And we'd be focusing on entering on the 88, 78, or the 70. Now it could be below the 88, that's completely fine, you don't need to stress about it. But if it's above, if you're looking to enter for example on the 50 or 60, it will not play out for you. You can see that, you know, maybe you got triggered in, price goes your way for a bit, but eventually it reverses. Now right now, what are we seeing on GBPUSD? Well, we're seeing that price is manipulating. Manipulation is another word for creating liquidity both sides of the market, liquidity of the lows, liquidity of the highs. So clearly that means that the market is going to have to either use one of this level over here, because this is that original area where price expanded and broke structure, or price is going to make a deeper retracement and come back down to test this one. Now the reason price uses different levels, for example, if it didn't want to use this one, it uses this one, is because the institutional candles that rest inside this zone are much more cheaper for price to use this, to buy here rather than over here. So for example, if you guys are at a store and you buy something, right, or you want to buy something but it's too expensive, you're not going to buy it right away because it's too expensive. You're probably going to wait for price to become cheaper, and then you're going to buy it when it's discounted. So same thing over here, price might not be discounted for the banks, and the way we find that out is by seeing what price does in this level. If price action respects this level and we get in from the buy, that's fine, but and then it goes down like this, then that means that this level clearly wasn't the discounted level, and that there's another level that'll be discounted, and most likely that'll be in this one, because this is our second area of understanding of expansion. So I hope this video made sense about institutional market cycle. Yeah, I don't know how long this video was. What was this, like 22 minutes? Not bad. But yeah, I'll see you guys in the next one, and take care.